10-year note yields continue to move higher today, getting all the way up to 447, the highest in a month, before closing out at 445, up about 8 basis points from Friday's close. Now, since the May 1st low, I should say, 10-year note yields are up about 30 basis points. So it's been a significant move in the month of May as we continue to see those rate cut odds diminish. Currently, we see only two full 25 basis point rate cuts fully priced in for 2025. A few weeks ago, we were talking about 4. So obviously the market making a bit of a shift here as we get into and get past last week's May FOMC. But ultimately, 10-year note yields have been climbing the entire time. Again, seeing a continued move higher, closing out at 445, up 8 basis points on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmbgroup.com, and you'll see that volatility was lower despite the fact that yields were going higher. So as we saw yields creeping higher, even after FOMC last week, we continue to see volatility moving lower. Lastly, let's talk about what we have tomorrow. Tomorrow's Tuesday. We get the NFIB Small Business Optimism Index early, but really the headline of the day will be CPI. That's obviously what the market is waiting for, to see if CPI is going to improve or it's going to help the Fed, or is it going to move higher and give that Fed that conundrum we've talked about, that Fed, that growth versus inflation tug of war that has presented itself to the Fed. Ultimately, if the inflation numbers continue to come down, that'll help the Fed's argument of wanting to be patient and wait for future rate cuts.